Someone just let me know in the comments if you guys can hear me. It's good now? Okay. So let's talk about GME today. What we're going to talk about is why price is dropping, when we can expect price to stop dropping, when we can expect another big move to the upside, and when we can, talk about higher, longer time frame targets that are possible. So to start, obviously we'll talk about why has price been dropping. So first look that we'll do is go through the triggers and just explain a couple of things. So if we take a look at how the triggers are stacked, we can see that the monthly trigger is stacked on top, weekly trigger below that, daily trigger below that, and hourly trigger below that. When the triggers are stacked in this order, it's obviously very bearish, and vice versa when the monthly trigger is on bottom. So we could look for, let's say, SPY is a good example. When you have the monthly trigger on bottom, then the weekly trigger, then the daily trigger, and then the hourly trigger, obviously that's bullish, and we see the momentum. So I want to talk about what the triggers being stacked this way can mean. So here you see AMC, where the weekly trigger crossed below the monthly trigger, and ever since then there was one rally through the triggers, but didn't stay above the monthly trigger long enough for the weekly trigger to cross above it. And since then, it's just been consistent downside. And these triggers are a very scary thing, because once you're stacked like this, puts the stock into a very bearish condition, and it's hard for price to move up again. Now, does that mean that GME is going to suffer the same fate? Doesn't, because when we take a stock like Meta, right? So Meta had a very similar situation. Meta was in this bearish orientation where the weekly trigger crossed below the monthly trigger. Stock was at about 200 at the time, and Meta was knocked down. Honestly, this looks a lot like the AMC chart that I just showed, especially with that last huge drop at the bottom. And as you guys could see, once these bullish crosses started to happen, so the hourly trigger crossed above the daily trigger, the hourly and the daily trigger crossed above the weekly trigger, then the hourly and the weekly trigger crossed above the monthly trigger. Now Meta's in the most bullish orientation. We're long right now. This is just invalidation for the MSW chart. And right, so although it was in the bearish orientation for a long time, it was able to eventually get out of it. Once it did, it was able to start moving to the upside. So by no means am I saying that it's over for GME just because it is in the most bearish orientation, but for expectations, it has to be understood that we're not expecting price to explode to the upside while in bearish trigger orientation. If anything, we are expecting price to be led to the downside until we see divergences, so bullish divergences. So let me show you what that looks like. A second. Just make this clear. Okay, so start with daily divergence. So when Meta had that reversal, you notice, or is it? All right. So when Meta had its reversal to the upside, you'll see that there was bullish daily divergences that told us buyers were stepping in here. So we can see the most extreme print right here, and then price made one new low, then another new low, while velocity made no lows, and that is the warning that the dip is being bought, and we can expect a reversal, and sure enough, price returned to the daily trigger. So it starts with price making lower lows, while velocity does not, which is bullish divergence. So when we take a look back at GME, where we are today, we now see our first bullish daily divergence forming. This is very encouraging because price made a low, velocity made a low, price bounced and is now making a new low, but velocity didn't. That's your first sign, your first indicator that sellers are running out of power or running out of steam, as you would call it. And once you have a couple of bullish divergences, so let's say price bounces and then makes a new low, and again, velocity does not exceed this low, that will be a very encouraging sign of a bottom. And once we have signs of a bottom like that, price will be able to move higher. If you'll notice here, velocity came straight down on the push down, and so we just expected further lows to happen, because if velocity makes a low with price, then you expect another low until you can form bullish divergences, and now we are finally forming some bullish divergences. So encouraging signs that GME is at least getting closer to a bottom, a lot closer than during this time period. Okay, now moving on to LDPMs. You can also see that the GME LDPMs are stacked bearishly. So they're stacked from highest time frame to lower time frame. So the yellow is the 2-week LDPM, and the orange is the 1 week, followed by the daily, the 4-hour, and the 1 hour. And when they're stacked bearishly like this, you expect downside to occur, and that's pretty much what we're seeing. So for upside to occur, what we would have to see is price be able to get through these LDPMs and then start getting some bullish crossovers the other way. So that'll start with the hourly crossing above the 4-hour, then the hourly and the 4-hour crossing above the daily, and then price can make a move to the upside. Same thing with the triggers. We can't expect any sort of big rally to occur, any big powerful moves to the upside to occur until GME finishes making its bullish divergences, breaks above the hourly trigger, moves to the daily trigger, and then what we want to see is the hourly trigger cross above the daily trigger. Once that happens, and you could see when it crossed down here, so you have the hourly trigger crossing above the daily trigger, and that is what sets up bearish move to the downside. When the hourly trigger crosses again above the daily trigger, that's when we can finally expect upside to occur and revisit the daily trigger. From a data perspective, by the way, if you guys have any questions, feel free to ask them in the chat. Just so someone asked about AMC. So now, by the way, sorry to interrupt for those watching about GME, but just for an MSW question, now that I look at this, it does kind of look similar to that reversal from Meta. So who knows if that's what's actually coming for AMC, but basically, again, there's a monster move to be played here, and I'm very excited for this. I've been saving cash for this move. So just real quick, if the hourly trigger can cross above the daily trigger, that would set up a possible move all the way up to the weekly trigger, with the daily trigger acting as the invalidation. So meaning once this bullish cross happens, so if price can get, 1 second, where's that ghost feed? So if let's say price does something like this, and then we get that bullish cross, then you would expect price to rise somewhere towards the weekly trigger, and then you can just use the daily trigger as a stop loss. So that could be exciting if that happens, but we're not there yet. Going back to GME, so VOX is currently in the propagation zone, which is bearish, and until we can see VOX and VOX trend move out of the propagation zone, we're going to expect downside. So if we look back, let's say 2021, you see the GME cycles. So you can see that every time VOX entered into the propagation zone, there was downside, obviously, but that was usually the bottom before an upside rally occurred. Same thing here. VOX moved into the propagation zone about right here. You can see all that downside that followed. But once VOX and VOX trend, which is the gold line, moved back into the stability zone, which is this middle area, that's when the upside moves happened. So the propagation zone tends to mark a bottom for GME, or used to tend to mark a bottom from GME before the next cycle would begin. Then we saw here where folks didn't really do much, but spend a lot of time in the propagation zone, which is basically just representing instability. So when VOX is in the propagation zone, it represents that the stock is unstable. Usually we'd expect downside to occur, and it actually held up really well during this entire time period, but eventually fell from 27 to 16. And then again, folks moving deeper into the propagation zone, although it's very bearish, shortly marked the bottom shortly after. Price is able to move back to the upside. And again, each time folks moves into the propagation zone, we do see some sort of nice bounce in price. And so here we are again. So while currently in the propagation zone, it technically is bearish, but judging by history, which you shouldn't do as a trader, I'm not talking about this from a trading standpoint, judging by history, it would make sense for this to mark some sort of a bottom. So what I'm going to do is I'm going to continue to watch GME, and we already have one bullish daily divergence. If we get another one, then I'm probably going to start getting long. And then if we get a third one, that's when I'm really going to go long. Because once there's 3 bullish daily divergences, there's a really good chance that price is going to move back to the daily trigger, and that can mark the bottom for a very, very, very long time period. So if I have a bundle of cash that I'm thinking about throwing on top of the shares that I already have, I might choose that spot to do it. So again, although technically this is bearish right now while VOX is in the propagation zone, in the past it's led to downside, which we've already been seeing. It's led to downside and then the bottom. So over here, there was some severe downside, but then that marked the bottom. And again, in August, folks moved into the propagation zone. There was severe downside, but then marked the bottom. So we'll see if we get something similar. The heat map is unfortunate. Stocks move up when they have bullish purchasing support below price. So if we take a heat map, it's hard to show you right now because I don't know many with that kind of heat map right now. But Tesla had it a few weeks ago when it went on its big bull run. Meta had it a few weeks ago when it moved from 300 to 330. When blue purchasing support is below price, that's when price moves to the upside, even if there's selling pressure above price, because the stock is stable. Currently, GME is unstable because whichever way it moves, it's going to get exasperated. If it moves up into purchasing support, it'll move higher too quickly, and if it moves down into selling pressure, it'll continue to drop as hedging requirements force dealers to sell shares. GME is also in a gamma squeeze, which is what usually happens when a stock moves into this into that heat map, and yeah, so we have negative delta, just more short delta than long delta. Market. Okay. Yeah. And then of course, we can wait for our sold puts to come in, and when they come in, if they can come in at the same time as we have our bullish divergences, and VOX looks like it can start exiting the propagation zone, that of course could be a bullish signal. So again, it does seem like we are getting closer to a bottom. We might need a bounce, then make another low, and possibly bounce and make even one more low. So it could be, we could be looking at somewhere down here to find a bottom, but this is the start of a bottom. So meaning it's constructive that we finally have a divergence, because this whole time there was just no bullish divergences. It was relentless selling. Daily velocity made a new low with each new low. But now when we're coming down here, we are starting to see a divergence. So the first sign of a bottom is now forming. Doesn't mean that there's not more downside, but it is encouraging in a bleak situation. Now moving away from the data and the triggers, just talking about GME as a company. I think at this point, my outlook and my stance is that there's no reason to be ultra bullish currently in this situation with the trigger stack like this. There just really isn't. And price action wise, like it's been time already for a while to stop expecting these monster rallies and these huge gains and these crazy GME moves. Now, of course, that doesn't mean there won't be big upside moves. There will be, but anything like like we saw like 100% rally back in two Marches ago, or something like that. Like the only big run that it'll probably have in the future is when the hourly trigger crosses above the daily trigger. It'll move up here, so that could be a big run. And then of course, if we break above the weekly trigger, that could be another huge run to the monthly trigger. But these are far away. These things aren't. The hourly trigger isn't going to cross up above the daily trigger anytime within probably the next few weeks. Just want to see if there's any bullish weekly divergences. No, there isn't. So you can see weekly velocity. This is the weekly velocity. Probably should be more blue. So with this low, weekly velocity made a low, and then we add a lower low, and weekly velocity made a new low. So there's not even much telling us that price wants to pull up to the weekly trigger right now. So there's really at this point, I believe the reason why I still hold and I actually purchase more shares every Tuesday. So I purchased some more today. It's automatic, recurring investment. But my reason is not because I think there's going to be like some huge run coming. It's because I really do believe in the gaming industry, and I really do believe in Ryan Cohen's vision. And I think, maybe even next quarter, GME can start turning profitability. I'm willing to give it more time, even if it means that my investment will probably suffer. But I do think that GME can make it as an e-commerce. Maybe not a giant, but I think it can get pretty big. So I do believe in the vision, and so I'll keep averaging down without emotion or process, just an automatic average every Tuesday, split up every hour of the day, one purchase. So completely randomized, and I feel like I'm averaging in. But again, as long as GME can start turning a profit in quarter three, in quarter four, in 2024, I feel if month over month we can start turning a profit and big money notices it, then that'll be the way for GME to move up. But currently right now, there doesn't seem to be still a thought process even of this thing might squeeze like from here. You just don't really see that thing happening. Like if we go back to January 2021, you'll see stocks squeeze when they're in this orientation, vice versa. I don't know if you could flip the map upside down on here. If you know how, you can let me know in the comments. But if you go back here, you can see these moves happen when the triggers are stacked bullishly. So you could see the hourly trigger, well, started off in the same way, of course. It's great. I get so much nostalgia when I look at this. Like, I don't know about any of you guys, but GME, at a bullish hourly trigger, daily trigger cross, moved up to the weekly trigger. Hourly trigger and the daily trigger moved above the weekly trigger, and so price rocketed to the monthly trigger. Then price broke above the monthly trigger, followed by the hourly and the daily triggers. And then as soon as the weekly trigger crossed the monthly trigger, there was just so much momentum for bulls. That's what caused, that move, all that momentum. So price isn't going to be squeezing from these lows. It's just not how price action works. So there's going to be it needs to be a lot of time and a lot of, how do I say it? A lot of changes in structure before we could get any sort of a squeeze. Now, AMC seems to be a lot closer. See that it already more than likely reached some sort of pivotal low. And now if the hourly trigger crosses above the daily trigger, it could have a huge rally to the upside. I don't know if that'll have any effect on GME, but until some sort of major structure, I don't believe that we'll see any sort of major upside moves, which brings me to my main point, hedging. Retail investors seem to, in general, be scared of hedging. I can't blame them, but I can say that it's frustrating in a sense because if we go back to the heat map, the reason why there is no purchasing support below price is because there isn't a lot of insurance being bought. When we buy insurance, let's say I believe that GME is going to experience downside, so I buy puts. When I buy puts, I'm going the dealer who gets the other side of the trade, who sells me the puts, he has to hedge by going long the market by purchasing shares to hedge the puts that he sold me. He's making money on the spread between the bid and the ask, so he doesn't care which direction the trade goes. He just wants to be protected and pocket the change. So when retail investors, like we see in Apple and Meta and Tesla, a lot of times, if they think there's big downside coming, they'll hedge by buying a lot of puts or by selling calls. and that'll introduce really thick purchasing support into the market as the other side of the trade, goes long, and the stock, even if it does move down a bit, will get bought back up and end up actually moving to the upside and possibly even higher than the starter point. So until we see, retail, obviously this can be changed very quickly. If retail would go ahead and start selling calls when price is moving down, when this is really obvious downside action. If retail understood when and why to buy puts, then it would introduce stabilizing purchasing support, and we wouldn't actually see moves down like this. But I think that it's becoming a little bit of an issue that people are really, really, really running out of money and are just going to have to sell their shares eventually. A lot of people that have all of their life savings in GME. And so I'm starting to get this feeling, and this is like really what's been on my chest lately, starting to get this feeling that if retail doesn't learn how to hedge and soon, like if retail doesn't learn how to hedge and soon, then this stock might really, really, really drop. That's just the harsh truth of it. There's no easy way to say that, but if retail investors en masse have to start selling to pay bills, then it's really only one option of what will happen to price after that. So why would you sell at such a loss? The price action does not reflect the fundamentals. I'm not talking about selling anything. I'm talking about hedging. So for me, for example, once price broke above the hourly trigger here, I sold covered calls and I posted it on Meme Stock Watch that I'm going to be selling covered calls with a stop loss above the hourly trigger. So as long as the price is below the hourly trigger, sold covered calls, and if price moves back above the hourly trigger, I'll close them for a win. And if not, they'll just expire worthless. And even though my share value is going down, I'm getting paid to hold on to the shares that are experiencing downside. Now, I'm personally not enough to introduce purchasing support into the market, but at least I could be protected while my shares are experiencing downside anyway. So that's really my thought. I know, obviously, there's not that many of you on here, but I highly recommend and suggest looking into hedging when things are bearish and prices going down anyway. It'll only help you stay in the game for longer. So that's the one piece of advice I would give to GME shareholders. Like it's not that hard to go on YouTube, learn about hedging, deep dive stocks. Justin has some really good videos on it. And, because it's time to get realistic about the fact that this isn't looking bullish. It's looking very bearish, in fact. Now, again, daily velocity, if we can form another one or two divergences, sure, we can probably get a bounce up to the daily trigger. But no guarantee if we get the hourly trigger to cross above the daily trigger. It's first of all. So right now, nothing looks encouraging about this. So it can hurt to learn how to hedge, to learn how to protect yourself from downside so that you don't have to suffer when price action is going against you. That's really all I wanted to say. If any of you guys have any questions, I'd be happy to answer them, but I think I pretty much talked about what I wanted to talk about. Yeah, new 52-week low in. I mean, all the data for GME was bearish. Like, yeah. So, whoops. So we have the triggers below all the triggers, macro bearish. LDPM below all LDPMs, macro bearish. VOX is in the propagation zone, bearish until VOX moves out of the propagation zone and VOX trend runs out and turns higher. Heat map, unstable, bearish until there's purchasing support below price. Snap graphs, bearish action is expected based off VOX. And option stable, big money is positioned bearishly. So there really wasn't a lot. There's nothing to be bullish about today. Downside seemed pretty obvious. So fortunately, this is the current situation that we're in. Again, with retail getting into these plays as being in this together, it's hard to change focus to protecting your own investment. With retail getting into these plays as being in this together, it's hard. Yes, yes, Peter, I understand. It's a great point, Peter. That's a great point. So Peter's saying that the retail crowd that's holding GME is not investors. It's more purchasing a stock for a movement, trying to make a difference and trying to get rich in the process. The thing and you know, they're not investors and they're not looking to hedge. The thing I'd say is that it's imperative. It's imperative at this point because the more this goes on, I mean, and I know firsthand that a lot of retail traders holding GME are struggling financially, and there's going to come a point in time where there's just no choice, unfortunately. Unfortunately, and hedging, you know, paying yourself for holding shares doesn't have to be the triggers. For me, it's just an easy system. When price goes below the hourly trigger, and the rest of the data looks bearish, then I sell covered calls and I purchase them only when price breaks back above the hourly trigger. But you can develop your own system and you know sell calls when the data is bearish, or even purchase longer term puts. It is more likely that something fundamental related will cause a break. Yes, that's what I think. I don't think anything else is gonna do it at this point. I think it has to come from the company making a turnaround because every indicator that we use is bearish. Now, again, this may be the bottoming of a Boeing cycle, so could be a lot more downside left. Like if we look at this one, there's a really big drop, yeesh, and then if you look here, it's also quite a big drop. So here, folks, enter propagation. We really might be headed down to 10. It's possible. So it's definitely not looking good in terms of bullish price action. Definitely not looking good at all. Now, another thing is that the smallest price action higher caused folks to jump super fast. And that is an indication that even small moves to the upside, the market is not tolerating well and wants to drop lower. So, Brian Cohn, GMETF, what's your predicted bottom of this new lower channel? So I don't do any uh, any technical analysis or anything like that, so I can't help you there. But I think we'll go down until price can form 2 or 3 bullish divergences, and then we'll have a reversal up to the daily trigger. Now, I will play calls in that move because GME likes to do that move like very fast, and then usually reject the daily trigger. So I'm gonna play calls for that move, but I don't think it'll be a longer term bottom. I think a longer term bottom will only come in when we see new lows with bullish weekly divergences. Then price will want to return back to the weekly trigger. While weekly velocity is stepping down like it is now, I don't think that we are bottomed yet. Now, I do think that if things can change on the macro, Jimmy can start turning profitability quarter after quarter, then yeah, there could be opportunity for upside, even without everything looking perfect on the triggers. But we'll see that in VOX if that's going to happen. Another thing is just that if you're playing options in this, like trying to play options to the long side, like there's very limited opportunity on this stock to make money on the long side right now. Like the trend is strongly bearish, right? Price below all triggers is strongly bearish. So playing calls is one of the worst things you can do for yourself right now in this stock. If anything, puts are going to be a lot stronger than calls for sure. A lot more hit rate, but it's hard to look at sometimes. You know, it's really disappointing. Like every night when I have to give like a bearish update on Meme Stock Watch, like I know I'm not giving anyone any good news. Just like it's like painful almost. But yeah. listen, hopefully things turn around soon. I just bought, sorry guys, prepare for it to go down. Gavin has a lower bound level at 415. 14. Oh, yeah, Gavin had 1412 as a bottom. So price did just bounce off that, I think. Yeah, just about this area. So we'll see if this marks some sort of bottom. Is there any hourly divergences? Yeah, there is. So you can see that this low of 1418 or so, hourly velocity made its most extreme low right here, and then price made a new low, hourly velocity did not. But yeah, I mean, if you do like playing options, play other stocks. That's what I would say. Play other stocks. I wouldn't play calls on this anymore. There's so many big moves brewing in tech. Amazon, Apple, Tesla, Meta. There's some pretty big moves brewing. Like there's no need to be playing upside calls on GME. Did you check the data? I don't look at anything TA related. All right. You guys have any more questions? MMAT? Haven't heard that name in a while. Yeah. So it's really, being pinned with its hourly and daily triggers. Let's see. Yeah, so this is pretty bearish look. When you have weekly velocity getting better like this, and price isn't able to move higher, that's very weak. So this looks weak to me. I'm actually looking at plug for a trigger cross. If I get this trigger cross, I think price is going to be able to move up here. The weekly trigger. Keep an eye on this. All right. So thank you guys for tuning in. And hopefully we'll get good news in the near future. Hopefully Ryan has something up his sleeve. But yeah, it's just at this point, I think holding is more about believing in the company than believing that the stock is going to go nuts out of nowhere, because that isn't looking likely at all. So yeah, gamma squeezes, 95% of them are bearish with an average drop of 4.5%. So you can see every time GME is in a gamma squeeze, it's not good for price. All right, guys. See you all back on Twitter.